these factors, and the last one is the SOFR market, secured overnight financing. Now this one is a bit more difficult to read, but the point being is that as long as we stay below 5.4 or 5.39, uh, financial conditions are good for bull market. We just want these to go back lower, if that makes stay around this, if that makes sense. At the moment, it's negative 0.8. This actually went negative on Friday. That means that markets should rally on Monday. I showed the guys over in the futures channel the tape level 2 data for the pre-market. Get a load of this. There is at 19,855 on Nasdaq. There is 840 contracts. Now we don't know the exact volume. There's normally a volume number. It shows times 1,000 or something. We'll find out in Asian session. So we'll be interested to see how much that order stays there for the duration of Asian session. The only demand below us is 605 with 60 contracts. So I would assume Asian session market goes just a little bit lower to 605. As far as Nasdaq is concerned, what completely blindsided me was sometimes market maker sell models. You don't know you're in one until it's too late, right? So I'll show you what happened here. So this move higher to this move here on the left, if I just use standard deviation, I think I've explained the concept before that all standard deviation selling stops at 4, 5 to 1, if that makes sense. So, or sometimes they can stop at 3.5. But the reason why it should stop at 4 is if you look at the bigger picture, the market maker sell model, if I was just to do this like this, and I was just to hide everything, that is first leg, this is second leg, this one here, and we took out the original consolidation here. So as far as standard deviation is concerned, and as far as the market maker sell model on the 4 hour, which can take a few days, almost a week and a half to transpire, a week actually, so it's done here basically. So that red line that I have, and I labeled it as sell side SSL 4 hour MMS market maker SSL end, but there is still the issue of an overshoot because Nasdaq is being Nasdaq. They like to overshoot, so they're just gonna do a bit extra, like there or something like or 605, because it's highly suspicious that on the weekly chart they were able to. If I will show you guys on the weekly chart, sorry, I'm jumping from subject to subject, but on the weekly chart, they were all able to just tap 50% of the fair value gap, which I don't think they like to do that, right? Does that make sense? So if I was to show you guys this on Nasdaq, they just tap 50% of it. They normally dig into it, to be honestly, a bit more. So this week's a week lower, and then we go back up basically, you know. So right back to what was I saying about American dollar? So when you apply the election years, previous election years, what the dollar did uniquely specific to elections, um, you can only look back 3 elections basically, but what it did during election years is that it never makes a higher high, so it won't go back. It will spend its time most of the year lower, and it will probably just come back up. Does that make sense? So September, this higher high will be a failure higher high because the Federal Reserve will cut interest rates, and December will be another. Normally December is a negative month for American dollar because people like to what do they do in America? Because January is tax season, I think, right? Tax year. So normally people try to spend as much as they can so that they're more expenses, right? So they don't have to pay that much tax. Normally January is the month that is bullish for because of tax. So anyway, back to the Commitment of Traders report. Now here's where traders get wrong. I want you to consider something, yeah. These guys are the non-commercials. This is Wall Street. These are the ones who trade along us, but they don't set the trend for the market. The trend is set by the commercials. This line here that I can't find the zero line, but so I just put it on 102 or 271, whatever. It's hard to get zero, but consider anything below here as a sell program, anything above there as a buy program. So these guys, non-commercials, are bullish the markets, but it's these guys below them that are the ones who set the trends, the commercials. Now the thing about the commercials is that ICT said you need to break it down into like 3 months basically, if that was to make sense. So you have a situation where even in a sorry, in American dollar, the DXU24, they are negative dollar, but the dollar is supported by our friends over here, the commercials, but it doesn't. They are still selling basically deep into the red, basically, if that makes sense. And eventually, you have a situation where the guys at the top don't have more money than the guys below, so therefore, you have something called capitulation in the market. It has happened to them once already, and it's going to happen. It has happened back in does that say May? So they got the American dates, 14th of May, and it happened 11th of July. So whenever you reach capitulation, basically they move them. Now I want you to understand something, that these guys, although they are below the zero line, that meaning they are bearish, they can sometimes they have something called because we're dealing with currencies, they have things to pay for. They can buy they need to buy dollar, right? Sometimes we're talking about pension funds, investment funds, hedge funds, police funds, teachers funds, and things like that. So sometimes, although they are selling, sometimes they can hedge long to go. They can be long, but because they need to buy cheap dollar, so it's in advance for them. So I want you to understand that an entity like the commercials can be in a sell program, but they can also hedge long, basically, if that makes sense. Whereas these guys have no intention of hedging anything. They're either bullish or bearish, and they try to push the market as much as they can, given by what we see here. Our friends, the non-commercials, which is Wall Street, is 18,550 net positions long. They added recently 2,342. Our friends here beat them by just $700, I think, or $800, $750. Our net position short American dollar 19,000. But guess who's helping them for the first time this year? The large retail, which is also adds 7 to 8 positions short. So these guys are negative 39% short. As far as open interest is concerned, open interest is decreasing in American dollar. So anytime the dollar goes high, these are hedged. These guys will do their best to keep it lower. A reduction in open interest is also selling, but there is another explanation that sometimes green is an increase in open interest. Someone is covering, basically, someone is covering their bets. These while these guys are long, the commercials, the non-commercials are selling into the rallies, if that makes sense. So that's why sometimes you have these sudden spikes like that. So they are set every time these are long, these guys it would cause a spike. For example, these guys spiked up, so these guys spiked lower, but they cover. These guys are, because they're not really trading futures like that. They have like ETF positions, if that makes sense. Like these ones here, so they're not leveraged like how we trade futures, but these guys consider one ETF as 100 futures contracts. So they have more buying power or selling power than the guys at the top, if that makes sense. Lastly, if we look at Nasdaq NQU 24. So as you can see on Nasdaq, if I can get the same zero line, Nasdaq, as you can see, although there was oh my god, 1 minute, sorry. Anyway, as you can see, Nasdaq, there was a period where our friends, the commercials, went above the zero line, and as you can see, the big push up. Is this is 3 months? So let me look at the 6 months. So, but as you can see now, they're hedging. Basically, they're taking profit, and by them hedging short, taking profit has caused the market to come lower. If that makes sense, do you get it? Whereas our friends again, Wall Street is gambling. So take it from me. Last week, Wall Street took a loss on Nasdaq, and they took a loss also on a while ago as well. But let's look at the 1 year chart is more interesting. So as you can see, our friends, every time they come over the market, every time they step over the zero line, consider this black line as zero, yeah. Every time they step over the zero line, the market rallies. When they go back below the zero line, even though They are short, meaning they're taking profit. They can, they now that Nasdaq is in a sell program, they will also buy into it, if that makes sense. If anyone has any questions, this would be the right time to ask, so I can answer your questions. Anyone? No one has questions. Right. So let me go back to the COT reports and let's look at Nasdaq in detail. Where is the notes that I have? Nasdaq. Where is Nasdaq? Nasdaq consolidated. So basically, although the commercials sold Nasdaq last week, let me get this one. I want you to focus on open interest on not so much E-mini, but I'm looking at Nasdaq consolidated, which is the more important data. So I'll find it for you guys here, and I'll show you what everyone looks at, but what I look at and that I learned from Larry Williams. But let me just get it for you guys. Chicago Mercantile Exchange, Snoop, E-mini, S&P, E-mini. Here, this data here basically this is called Nasdaq Consolidated. It's more compact and it's actually, in my opinion, it tells you where Nasdaq is going long term. Although the market is rallying, I'll take it from me. Nasdaq is due a heavy drop just after earnings season because percentage of open interest for each category, percentage of traders, although the number of categories of total traders is 215 bullish, open interest is negative, if that makes sense. There is more 230,000 contracts to the negative. Why? Because our friends who have 159,000, you cannot tell me 150 compares to, like, if you add these two numbers together, it doesn't even make these two numbers. Does that make sense? So our friends have the Nasdaq is in a sell program, but it takes 5 weeks to turn a market, right? So that's what Larry Williams said. It takes 5 weeks. So assume that this is week 1. Week 2 we can go higher. Week 3 we can go higher. Week 4 we will start to drop. Week 5 we would drop. Now, what do they know that we don't know, if that makes sense? So the issue with the United States economy is that if the Fed doesn't cut, if the Fed will cut interest rates on September, but they will cut because of the job market is becoming weaker. Does that make sense? So although the Fed has been able to keep interest rates, inflation low, they're winning the fight against inflation. They have also caused a recession. Now the Federal Reserve is going to cut interest rates for a negative reason. Whenever the Fed cuts rates for negative reason because of a possible recession, people losing their jobs, markets go lower. And we do need to go lower, to be honest with you. But if I told you that our friends have started their sell program on NASDAQ already, meaning that we go lower, but they need a lot of time to build their position. So, but even though they are going low, our friends here, the commercials will be able to keep Nasdaq to go higher, because in this situation, our usual suspects are here. The non-commercials, where's Nasdaq? Nasdaq. So they took profit on longs and they took profit on shorts, but the still net position in Nasdaq is still positive 6,174, and in the E-mini Nasdaq is positive on the consolidated data, which is the larger data, as an how can I explain it there? These lot buy Nasdaq index as bulk, so that's why it's called consolidated data. But on the ETF, the futures market that we trade, Nasdaq Mini, there is still positive net long, but open interest is decreasing. Whenever open interest decreases, it means that someone is covering, going the opposite of the market, and they're covering. Basically, there is short covering. There's also long covering, basically. So I'm just saying maybe there's 4 more weeks of bullish price action on Nasdaq until the index will drop September. Negative rate cuts for bad reasons, market drops. October we drop, and then at the end of October we go up. If I do Nasdaq on the SeasonX data and I choose, I show you the same thing on Nasdaq, and we look at election years. As you can see, in the last 3 elections, Nasdaq, normally the last 2 elections, but the same, this one applies, Nasdaq goes up makes a peak in August or 2nd of September and drops drastically, and then the market rallies again. But Nasdaq does not take the high. But I think that on this occasion, this part will be disproved because Trump is like the idea of Trump coming back is bullish for Wall Street. So this part of the data will be disregarded because 2024 hasn't materialized. So normally in every 3 election years, the first two are the same, the third one is different. They make a new higher high basically. So we got higher on indexes on that department. If I was to remove the election years and I was just do like normal data, it looks like this without no elections, right? Just a normal seasonal chart over the period of last 10 years. Nasdaq would start dropping now ASAP, but on this occasion it's not. It's going to Nasdaq is going to drop at the end of August. So what do you guys do as traders? How do you trade these events? On most days, if you see on the technical setup, if you see a market maker buy model, I the only advantage I'm giving you and make you understand is that every time that you see a buy setup, you should hold with confidence. Say you have a standard deviation move. I'll give you an example what I mean. I'll just give it. We'll just do random standard deviation, and we'll do it on the 5 minutes chart, for example. So we'll have something like this, yeah. Um, when you know that institutional order flow is behind you, or although the market has started their sell program, we have greedy Wall Street pushing the market higher. Commercials will let them have the market for now, but I'm just giving you an example like this. Say, for example, we are to go higher. How do you know that your target will be met? You know from what you heard in this lecture that Nasdaq will drop at the end of August, just around when earnings season finishes. That the Nasdaq will drop at the end of August or September 1st, whatever. So from now until then, it's a trajectory to the moon, sky high, right? 21,000, whatever, 22,000. You get it? So and you know that our friends, although they started their sell program, they will be hedging long because they don't want to get decimated by our greedy friends with their futures contracts, right? So although they hold ETFs, they don't want to take a loss. So even in a sell program, they can hedge long. And this is what many people don't understand about the commitment of traders report, that this is the most single data event that will give you confidence to hold your trades longer more than everyone else. How do you know positions will be met? I'll give an example. If you are on the 5 minute chart, normally you're recommended to take profit at 2 standard deviations by ICT, but normally because of the data that you have, I put it to you that instead of closing at 822, you can have the confidence to, let's say you did 2 contracts, you take the first contract off here and your second contract, you will have the confidence to hold to 864 because the market will now undergo a big move higher by another 1000 or 1500 points, of which you can benefit. Let's say there's 1,500 points on offer. 300 of them will be negative sales and 1,200 of them will be positive. Your aim is to take advantage of the positive data, if that makes sense. And that's how Larry Williams won the Robbins Cup. Larry Williams, when he was his time to take opportunity, he milked the market. So when it was time to go long and he knew when the market was about to turn, he would milk it to the fullest as much as he can. Does that make sense? So that's what I'm trying to explain to you guys. For the next 4 weeks or 5 weeks, we will experience a big move up on the index, and you should take advantage of it and you should make a lot of money. While everyone is going to be, oh, August is a dry month. No, best believe that August for indexes, because of earnings season Q2 earnings season is always times to be at the end of July, in the middle of August, so that there is a reason to continue trading. Although Forex will be taking a break because the central banks are on breaks, the indexes is full. I know a lot of people that make a lot of money in August trading indexes, and a lot of people that don't make money trading Forex in August. Does that make sense? Last year when I was trading Forex, I saw all the index guys making money and I was pissed off. I was in the wrong market because I didn't realize. Does that make sense? Although I called the indexes higher, I didn't trade them. I was busy fighting with the Bank of England on GBP USD, and they decided to go on holiday and they left everyone for dead, basically. Does that make sense? But anyway, American dollar is in a sell program long term. It should go lower, and now indexes are also in a sell program. They also should go lower, but not before another 5 weeks of buying, if that makes sense. So I hope this has helped you guys understand some things about the Commemorative Traders Report. Also, the if you focus on ICT core contents, what I said here was explained by ICT, but nobody pays attention to these core contents because everybody disregards the data. On the issue of triads itself, specifically, I need to talk to you. Sorry, on the issue of triads, the first this is the lecture: interest rates. Wix. Give interest rates effects on currency trades. I think sometimes people need to go back to basics because he explained that well that the use of these three here, the US Treasury notes 5 year, 10 year, and the 30 year bonds, basically like that. So if that makes sense, and that's how you predict Dixie dollar prices to go lower, while these guys, our friends, go. These guys are it's confirmation here that we have a lower low on Dixie dollar, and the reason being is also ICT said look for order blocks and they will support or bearish PD arrays. This one being that one in particular from Monday the 9th of October 2023. The market went into it once, twice, second time drops basically for completely rolls over. I gave you like the seasonal chart for Dixie Dollar based on we are in an election year. If this was any year and it wasn't an election, then yeah, indexes go lower or they go sideways, choppy chop in August. But this August we will benefit from good clean price action, and everyone should take advantage of it. And as far as Dixie Dollar is concerned, Dixie Dollar will not pass the mark of 106.02. And American dollar, in my opinion, is heading towards 88. What is the target that I gave? So 88 here. And this will be a big call, but for many reasons that the Fed is going to panic. They're going to cut rates and they're going to deliver aggressive. When they realize that they should have cut sooner, they will give aggressive rate cuts. We're talking about 50 to 100 basis points. Also, there is a possibility that Jerome Powell cuts 50 basis points in September, and the market is expecting 25 basis points. The fact that he cuts more than the people expect will be the reason why the indexes drop. So the rate cut, although it's positive, the amount that he cuts will be a shock to the market, and that will be the reason the market drops as well. So you have to try to start looking at the markets like this. Everyone return to basics. As far as the Commitment Traders Report, it's important to base your trading on this to try to get a long-term view of the market and trade in the direction that where these guys are trading basically, and this is a 6 month out, and so every time they step out of the sell program, go into a buy program, but even in a sell program they are hedging to go basically where they made a lower low here, they should expect to go back up basically. Does that make sense? But our friends here are the ones who are taking the loss, so consider everyone as who thinks they're smart money as Wall Street and they lose money. The real smart money is gaming the market, if that makes sense. So that is it, guys. I hope you found this lecture helpful, and that's my market review. Dixie dollar to go lower next week. Index forex pairs to go up. You could do the same prediction on GBP 10 year. Look at the GBP markets. These lot as well. Why does it keep doing that? Everything is red. Okay, this one is not. But yeah, you can look at the GBP at 10 year and British pound futures. I think it's called 6B1, and compare the UK government bonds and stuff like that, and the euro is 6E1. But if you don't need to do that because you just need to look at the dollar, and if you trade GBP or Euro USD, you just dollar is bearish, so you go bullish on the other ones, if that makes sense. Let me just show you one last example. 6B GBP. So how does it look like? Where the hell is the futures GBP? Futures? No, I can't find it. Currencies. Also, they've got GBP as BU64. Right. Can't find Community Shares Report. Anyway, BU, is it here? BU64? Anyway, that's the anyway, same rule applies. Dixie dollar is bearish, you go along on these other ones. Any questions, anyone? No questions. Right. So next week we have on the economic calendar. Let's see what's happening. You know, Joe Biden, the fact that he dropped out, yeah. If he didn't announce Kamala Harris, we would have had a market gap down. The fact that he announced Kamala Harris was the good thing. So let's look at the eurozone. What do you have next year? Australia as well. Japan. Is that it? Where's the eurozone? Eurozone. I think next week we have PCE, which is on the last Thursday or Friday or something. Friday we have what the oh, Friday's not NFP already. That can't be right. Shit. We have PCE on Thursday. We have the Bank of England interest rates decision on Thursday. Am I even looking at the right calendar? This is the wrong calendar. Sorry, that's the week after. This week. Sorry, this week here. I always had a heart attack. ECB lane, no, not important. 2 year notes. I'll let you guys know how that goes because if there's no demand, then the market normally drops. This is about 1 o'clock. It's American time, so yeah, 1 o'clock America. Yeah, on Monday I would advise on Tuesday. So I would advise get out of your trading. Don't be in the market when these auctions take places because they cause sudden drops in the market, like big drop, like spikes, wicks. Because if there's a demand for the notes, then there should be because these are very short durations, and it will cause a wick in the market. Whatever market you're trading, is everything wick, and you'll get wicked out of the trade. This is 1 o'clock in the afternoon, so just wait for 1:30 and then you should be okay. Existing home sales, okay, not important. European PMI, S&P manufacturing UK PMI, goods trade balance, not important. PMI data on Wednesday, right? Is this Wednesday? Wednesday. The all important is GDP Q2. This is not revised. Is it revised? I think it's the revised one. We'll find out. So this is second revision, so we'll see if it's better than before. It's not a major event, to be honest with you. It's always the first one that matters. Initial jobless claim, same shit. PCE is the main event. So now PCE is important because, and then we have Michigan inflation expectations on the same day. Whoever makes the economic calendar likes to do practical jokes because they got PCE and Michigan inflation expectations on the same day this month, which is a joke. So if PCE comes in lower and Michigan inflation expectation is lower, we have a double rally on the indexes, but we'll see what happens. Now, there is an issue with this PCE because CPI came in lower, but PPI came in higher. So it will be interesting to see what happens with PCE. Jerome Powell wants a decrease month over month of 0.1% of PCE, and looks like PCE is going to spike up by 0.1%, which is back at stalemate, right? So we'll see what happens anyway. And we have next week, we have him talking. If it stays at 2.6%, that's good. And before next week's FOMC, and that's all that matters. If the data, no change in the data is bullish, because it's neither negative or like as long as it doesn't go up and if it stays the same as before, the market will do the same outcome. Like I'll tell you the economic data, yeah. Last month PCE was at 2.6%. This month PCE comes in the same. Because there's no change in the data, the market will react the same as before as it did when the data first came out. This is very important that you guys understand. So if PCE is still at 2.6%, we're bullish because the PCE never went up. So therefore, not going up is the fact that the market will go up, basically. Does that make sense? If the data comes in lower at 2.5%, then Jerome Powell's hands are tied and he has to deliver the rate cuts and the positive things. So, but yeah, that's it, guys. I will catch up with you guys throughout the week. This week is a light week, except for main event is PCE. Every other day is technical analysis, so you should all be fine. Bias going forward is bearish Dixie dollar, bullish foreign currencies, bullish gold as well. I don't know why everyone is bearish gold because they don't know what the hell they're talking about. But they should be bullish gold, and indexes set to recover their losses. and this market goes higher. And we have Tesla and Google on Tuesday after market hour close. I think so. I don't know if Tesla is before the market though, but I know Google is after hours. So with earnings season on Nasdaq and S&P 500, expect almost every single day new day opening gap. We saw last time in Q1 when we had earnings season in Q1, every day there was a major event, a big company. We had Facebook, Tesla, Netflix, Nvidia, Google, all of them. There was always a gap. Every single day there was a gap. So make sure you keep track of these gaps because they're gonna do ping pong back and forth between the gaps, you know. So, but yeah, and that is your market update, and I'll see you guys throughout the week. Take care. Bye bye.